What's going on, everyone? This is Jordan with Conquer Trading and Investing, and this is our weekly Forex forecast and analysis for the upcoming week of March the 9th through the 13th. It's going to be another big one. This is an important weekly Forex forecast, setting the pace for the week ahead. Get comfortable. Let's get to it. Listen, we're seeing market ranges expand. You have to position size accordingly. Right now, an enormous opportunity across the markets. You really need to focus in and take advantage of this, why it's here. Let's put together a plan together. Look, before we get into it, and it's going to be a really important session because right now the markets obviously are very volatile and it's really important to have this plan in place. I want to take a moment and invite you, if you haven't already joined my private trading group, to really consider that. This opportunity to work with me, to learn my rules and methods, to trade in a way that over time is going to give you the edge to make money, to have me as your mentor, to really improve your great game. If you're serious about succeeding in trading, this is an opportunity you can't pass up. There's a link in the description below. Go ahead and take advantage of this opportunity while it's available to you, because one day it no longer will be. Look, there's no question if you're ready to be serious about your trading that I'm here to help you, and I could really help you turn the corner to profitability, consistency. I could give you that edge of having someone who's doing it, being there with you. All right, let's get into it. Let's start here with the Euro US dollar. Before we begin, be aware that on Thursday the 12th, the ECB is meeting. Do you think that Christine is going to stand by and do nothing as the euro has been appreciating? I don't know. Let's see what she does. Her hands are kind of tied. Nevertheless, I'm sure she's going to do her best so that this doesn't appreciate all the way to 1.2, right? Look at this. Since we've bounced off of this support over here, down here, and no, I do not think that the gap from the Macron election was closed, we have shot up like a rocket, appreciating over 500 pips in a relatively short amount of time. Now, why has this happened? Well, the US did an emergency rate cut this week of 50 basis points. The market's already looking forward to their next meeting later this March for when they're looking, or the market's looking for them to cut at least another 50 basis points. Is there room for disappointment there? You know, this could go both ways. The Fed could cut ahead of time. The Fed could cut before their meeting if they need to, if they're pressured to, or the Fed could hold off and not cut at that meeting. If that was the case, you would see this repriced enormously with dollar strength coming back into the market. Let's just look at what's going on here on the charts, and you could see we've taken out enormous amount of resistance levels all the way up. This was a big one over here. This was a big one. This is one that I leaned into. It didn't work out. This was the 1.1185 level. We took out on Friday another resistance level, and it didn't hold, right? It didn't hold at all. Now, for sure, there was some intervention in the markets. The plunge protection team showed up. There's been a tight correlation between the S&P and the euro. If you look at the Euro US dollar and compare it to the S&P over the last 30 days, the correlation is so tight. And we saw, going into the weekend, we know the plunge protection team wanted to have some good headlines. They did what they can. If this spike is just because of that, be aware there's a good chance on Friday we come up and we take a look at possibly testing that. Now, if the market got ahead of itself, which to me it looks like it might have. Now, some people have changed their calls. They are now calling for 1.2 possibly if the Fed cuts to zero, if the ECB doesn't act. All that is entirely possible. Everything's on the table. Step back with me. Here's the trend line that I'm looking at. I don't think we break this. There's strong resistance even up here. We'll take a look at that if we get close to that. That's not in the cards right now. Again, we're always developing our plan each and every day. We're building off it. We're doing our analysis together. If you haven't joined the replay, if you haven't joined the live streams, we live stream every day at 9 o'clock in the morning Eastern time. Do join us. Watch the replay so that you stay in the flow of the market. The markets are fluid. You need to put in that work. Doing your analysis daily is the single most important thing you need to start with as a trader. Go ahead and join us for that. Right now, this week, if we do not hold this area over here, and we're at this resistance level, I still have it marked as resistance because we closed at it. We didn't close above it. but we could go either way on Monday. It's really too difficult to tell. But we do know that if we start getting rejected over here, you could come down to the 8-hour with me. If we start coming down over here during Asia, during London, make lower lows, then there's a really strong chance we're going to come down and take a look at least at this support and possibly this support over here where we put in last week that double touch down at 1.10995. All right, to the upside, if we hold this line here as support and start trading upwards, where are we looking at to the upside? Now, I think I have the resistance line over here at 1.14318. However, it starts, I would say probably closer to 1.14. All right, so that's an area of supply over there, and we could be testing up there easily as well next week, depending on what happens with the line that we closed at right now. A very important line. It could go either way, as support, as resistance. Let's see how the market opens up, and let's see what they do during Asia and what follow through we see during London. Now, there are a couple of different pairs that are currently set up. We're going to start with them. Before we get into any other pairs, we're going to start with them. All right, Australian dollar, US dollar. If you're seeing red, that's because we have taken out basically every possible level ahead of us. And look what's happened since. Do you see what's happening with me? Do you see this big retrace up into pretty strong support, right? This is why I have my attention here. Look, go ahead also extend down this trend line. Let me do that with you. Extend that down. And then also we're going to need this one. What's going to come into play for us, maybe. All right. Now, this trend line here, I'm going to mark this yellow for you just so it stands out a little bit because it's going to be pretty important. I'll tell you why in 1 second. I'm also going to mark this line over here yellow. Now, they're both resistance, but they're important ones. So I want to focus in on there with you. All right. Step back before we get into our analysis, before we take a look at this setup. We saw over here, we had this long year-long trend line, and it broke out over here back in December, and it looked like we were on our way to some nice global growth in 2020 with the US and China reaching the phase 1 trade deal, and things were looking okay going into US election. And then suddenly and quickly, the coronavirus entered the picture. Risk off entered the markets. We took out support after support after support. That's all resistance now on the way up. Look at this area over here. Look at this area over here. We took this out recently, and we're now trading below it, testing back into it. What does that mean? We sell resistance in downtrends. Here's the resistance. We're in a downtrend. We're looking to sell this. If price early next week, if price gives us a correct signal according to our rules and methods, we're looking to go ahead and sell this over here if it's at the correct time of day. Now, if the trade never triggers, we have this area, strong area of resistance to take another look at as well and looking to sell. Now, if and when we get above this yellow line of resistance and this trend line, this outer trend line over here, if we get back above that, that is when we become bullish on the Australian dollar. At that point, we could say, okay, maybe the tide has changed for the dollar. Maybe we're going to see in the second half of 2020, actually China, which contained the virus, really start to see some growth. The Australian economy is going to benefit from that, and we want to get long here the Australian dollar. That's not here right now. We're currently in a downtrend. There's currently a risk-off mood. We're coming into resistance. We're looking to sell it. Same thing over here. We're looking to sell into this area over here as well. If we get above it, all right, then our bias could change, and we could start looking to the upside again. Now, let's also take a look at the New Zealand dollar, US dollar, also offering a nice opportunity. You could see that we have taken out an area of resistance over here on Friday. We came into the closest and strong resistance, currently rejected by it a little bit. You can see that little bit of peak. What's important is what happens on the Asian Open and going into London. Let's see. This is offering as well nice opportunity in a downtrend, coming into resistance. Now, the possibility, definitely one of two things could happen. We could get stopped out of this trade if we get an entry, or we can never get the entry. Price could keep rising. We will then readjust. We'll be looking on our live stream. Watch the replay if you can't join us, and reevaluating where a possible entry is. Right now, both of these are offering opportunity. Look at this downtrend. Look at this downtrend over here, everyone. Now, over here also, a little up, further up higher, there's the possibility that the pressure on the US dollar continues further. We could see a further retrace. We would still be looking at selling into resistance if price were to retrace to the next big area of resistance. You could follow my mouse over here to the right. Right over there is probably a better look. I'm going to move this area down, even though this is resistance. Let me draw in another one that's going to come into play for us. There it is. All right, so this is all area of resistance. If we break through here, you see this little local area of resistance I have as well. There's a lot of work for it to do to the upside, and with good reason. My inclination is that the market has overreacted against the dollar, that it is pricing more rate cuts than the Fed's going to be looking to do right away. Let's see what happens. If the Fed does continue to cut and gets close to zero, obviously something is systematically wrong. And what is that going to do? Is that going to cause further dollar sell-offs? Or are we going to see things breaking and then a flood of liquidity back to the dollar? You know, that's what trading's all about. Follow the charts. Follow the charts. There's no reason to get bullish on the New Zealand dollar, US dollar at all. You're in a downtrend. You're looking to sell resistance. Let's take a look at gold. Gold has been quite volatile this past week. We have seen some really, really sharp moves. On Friday alone, we traded up, made new highs, traded down 1%, traded back up to highs, traded back down to minus 1%, and then traded back up to new highs. It's been all over the place. It's been very volatile. Is there a possibility that we see a spike down on gold like we did over here? I'm not so sure. I think this was an opportunity. At the same time, I'm not chasing gold up here. You know, we've seen it's just so volatile right now. I think the best play is to wait for it to calm down, wait for it to consolidate, and then look for a break either up to the upside or downside on gold when there's more clarity. There's no clarity right now. It is very, very tough out there for gold. I really honestly believe the best course of action right now on gold is to let it do its thing, let it settle in until we get a clearer view at it right now. A lot of people are losing to the downside. They're getting stopped out to the upside. It is just really not the place you want to focus your attention. Of course, I remain, and the current environment right now where the central banks are all worldwide lowering rates, we're looking for stimulus action, is all super supportive of gold. But as you saw over here, when the equity markets crashed, you saw gold also came down as people needed to free up some money that they had, not holding physical gold, of course, but trading gold on margin. That could happen again. People are aware that happened during the 2008 crisis. So right now, listen, gold is very erratic. Wait for this to set up clearer. Definitely interested in gold as it is in what I believe to be a bull market. I believe we're going to take out this year 1900 and probably also go on over the next 12 months to much higher highs than that. It's just a question of timing. Let's also take a look at crude oil WTI, which took out a really important support level, a surprise to a lot of people over here at 44.92 on Friday. Crushed down. I'm sorry, there's an important level. I don't even have it in here. Let me draw it in right now. It was at 42. It took that out on Friday as well. That was a big surprise. I thought that gold was going to, but let's try that again. I thought that crude was going to hold this area at 42. I actually thought that might be a place that a lot of traders wanted to lean in and look for a nice bounce. It gave way. If this continues to hold over here and there's not a sharp rebound early next week, which probably there won't be, we're seeing just a global slowdown. We're seeing that lack of demand from oil. We're seeing OPEC not willing to make cut in productions. So obviously that all equates to a lower crude oil price. It all makes sense. It's all adding up. What do? You're in a downtrend. You sell off of resistance. Look over here. Let's see what happens. If this level here holds at 42, if it holds at 42, is an opportunity to go ahead and continue to get short because 26 could be in the cards. All right, let's take a look now at the US dollar, Japanese yen, and let's also talk strategy under the current environment. Right now, the US dollar, Japanese yen has taken out a lot of, it was a failed breakout. We were watching this over here. Here was the breakout, 5-year trend line. It's in yellow. Once price broke out from there, came up into the resistance, normal behavior, came back down and tested that broken resistance to see if it was going to hold as support. It did not hold. Once it took out this 109.71 level, we all became very, very strongly biased towards the Japanese yen. That trade paid off very well. What's happening now? Are we coming down into some support? You know, it's hard to say. 104.50, I would say 104.50 exactly is also a good level to possibly look at over there. We could go lower. Now, has the yen come too far too fast? That's tough to say. You know, there's good reason why the yen is seeing its appreciation. It makes a lot of sense to me. However, it's not something that you know, if you're not in a position right now that you want to chase, what you want to do is you want to look for further pullbacks, retraces into resistance and look to sell that resistance. When the markets move this sharply, you normally could see pullbacks just as sharp. So be aware, wait for those pullbacks. Right now, show patience. The Japanese yen, the Swiss franc, they're leading the way and they're leading for good reason. All right, focus in on them, stay with the strength, but wait and be patient. Wait like a hunter. Wait like a feline on the hunt, sitting down, crouched down, waiting for its prey, and then pouncing at the right moment. Now is not the time to get into a trade. To get into a trade, you're gonna get crushed. Just show that little bit of patience. Wait for some of these moves to retrace into a resistance level and then load up once again. We have to get back above this trend line over here and above this support at 109.71 in order for the Japanese yen strength bias to dissipate. All right, that's not happening right now. I use this as a barometer. Of course, the US dollar has gone beaten up. Has it gone too far? Perhaps. There's a chance that the market overpriced and overreacted as markets and humans tend to do. We'll see next week what happens. We'll see what the ECB does. In 2 weeks, we have the Fed meeting. We'll see if they do cut rates further or they disappoint the markets. It's going to be a volatile next couple of weeks. Focus in on the charts, show that patience, wait for your trades to come to you. This is what it's all about. And then when you get into a good trade, you have to give it the right amount of time to really fall into profit right now, because big profits, as you see, can be made if you're on the right side of the market. Trade with us. Watch the replays, join us live. Get on the right side of the market. Stop guessing. Have a really firm plan in place. Again, if you're not yet in my private trading group, go ahead and do sign up now. This will absolutely change your trading. Working with me, having me as a mentor, being able to discuss with me what is going on with you personally, to figure out where you need the most work, to figure out what you do need to do next to up your trading. It's really going to make drastic changes in your trading results, in your whole overall mindset and understanding of the markets. I really urge you to take advantage of that opportunity. You can find that link in the description below. If you haven't yet subscribed to the channel, the content that we put out on here is extraordinarily helpful. Do subscribe. Not only subscribe, be active. If you learn something, hit the like button. If you have a question or any insight you want to share it in the comments below. I respond to all comments. This is a great community. It's a phenomenal community. I invite you to be a part of it. All right, everyone. Have a great week. I'll talk to you soon.